At the end of a brutal month for the stock market, these last two fabulous days aside, what managed to hold up? What stocks managed to go higher since the beginning of October? We've seen some real strength in the recession-proof names, especially utilities. Take American Electric Power, AEP, which owns the largest power transmission network in the United States, along with some major power generation assets. Now, when long-term Treasury yields started ticking higher earlier this year, the utilities got slammed. But thanks to a flight to safety trade, the group got its groove back in October. American Electric Power sports a 3.65% yield, and it will do just fine even in a slowdown, which is why the stock has gained 3.5% since the end of September, even as the averages have been hammered. Even better, the company delivered a nice beat and raise quarter last week, but can the stock keep climbing? I don't know. Let's check in with Nick Akins. He's the chairman and CEO of American Electric Power. Learn more about the quarter and where his company is headed. Mr. Akins, welcome back to Mad Money.
Great to be back with you, Jim.
All right, Nick, I got to tell you, your stock has been among the best during the month of October. There are utilities that did better. It almost seemed like on this particular conference call, you lamented how well your stock is doing, given how great your earnings were. Lamented to the point that you sang some Chaka Khan. What is that about?
Oh, yeah, they're up for the Rock Hall of Fame this year, so I thought I'd use that as a reference to really trying to give our shareholders that warm and fuzzy feeling going forward.
So it's I feel for you because, baby, when I look at you, I get a warm feeling?
That's right.
Well,
That's
that
right.
is you. I should tell people, Nick is deeply involved with the Rock and Roll Hall of Fame, which is one of the greatest events in the world in Cleveland, and he takes it to heart. But I have to tell you, Nick, in the end, your stock did do better than most stocks I followed the month of October. And a lot of that is because you had a great quarter. And you should talk about how terrific it really was.
Yeah, we did have a great quarter. Weather obviously drove a lot of it, but obviously the 8.1% dividend increase was really very good for our investors and really showed the confidence that our board has in the business plan going forward. We're obviously seeing 5 to 7% earnings growth rate for the foreseeable future, and certainly we expect dividends to be commensurate with that growth. And we have a solid financial plan, solid company focused on capital deployment, particularly in transmission and other areas, and certainly it just shows that our business plan going forward is very positive.
Now, Nick, one of the things that happened this quarter that was interesting to me was that you always measure yourself, and your stuff is so transparent, against the GDP of the rest of the country. This time that your areas did not outperform the GDP. Why was that?
Yeah, that's right. For the first time, we see some tempering of the economy, particularly when it's non-oil and gas related. Oil and gas is still doing fine. Industrials grew by 2.4%, but we saw residential and commercial growth come down a little bit. We think it's really driven by a strong dollar. Certainly some of the tariffs are having an impact on non-oil and gas related activities, chemicals, and so forth. And we're seeing some level of tempering. So we're watching that very closely as we go forward.
I've been telling people, look, I'm very worried that the economy could slow down, both because of the higher interest rates, 5% mortgage rates, and because of the of what I regard as what tariffs have done historically to the economy. But the reason why I say it is not political. I looked at your numbers. I mean, your numbers clearly indicate that if the economy is no longer accelerating, at least the industrial economy, and that does matter for America.
Yes, it absolutely does, because you're seeing it really sort of erodes confidence when you see that kind of activity start to temper in that regard, particularly commercial load, which is your mom and pop stores and commercial big box stores, those kinds of things. And you want to make sure that continues to progress, because residential will follow. Industrial's doing well, but only in particular sectors.
Yeah, thank heavens, because you are not a political person. You are straight out just telling us what your data shows. And that is the data that I think that the Fed should be looking at, not just their Federal Reserve books that they have. Now, let me ask you, if the president were to call you and say, you know what, you have a lot of coal in your districts that you serve, I want you to use more coal, would you be able to explain to him that it's more complex than that?
Yeah, I think I would. It's much more complex than that. And obviously, we're trying to do things to develop those particular coal-related territories, like our Appalachian Sky initiative that focuses on really a lot of the people in those areas are well versed toward industrial type activities. So we're trying to get industrials to locate in those particular areas to give options going forward. But for coal-fired generation continues to fall in this country. Certainly exports are a big impact from that perspective. particularly metallurgical coal. We want to see that continue to progress, but I think it's going to be tempered in its approach relative to coal-fired generation. So we have to really think about what that means to the economies in those regions of the country.
You know, Nick, I was on the General Electric call, and they've got a straight shooter in there now, Larry Culp, and that company badly misjudged something that I think I may have misjudged, which is that with natural gas so cheap, you would expect that a lot of turbines would be built. But the era of the big project's gone, isn't it?
I think you're seeing a much broader view of resources going forward. Certainly renewables are coming into play. Natural gas is being looked at as a backup source for renewables, but you're also seeing, we view transmission as a resource to bring renewables to market and to be able to optimize the entire grid from a resource perspective. And you're seeing energy efficiency and those smart analytics that are in place relative to the system that are really enabling us not to build that next central station generation facility. So you can expect that to continue to be tempered in the future.
One of the reasons why I've been recommending your stock for years and years and years is you don't take big bets. There are utilities that have built gigantic complexes that have wrecked their balance sheets. That's not AEP style.
That's right. We have thousands and thousands of smaller projects. That's deliberate from our perspective because we're able to really have execution control around these projects and adjust based upon what we're seeing financially. So it really gives us an opportunity to focus on the ins and outs of those kinds of projects to accumulate to really a steady earnings and dividend quality for our shareholders.
Well, that's just what shareholders really want when it comes to utility, which is why I've been recommending you take the least risk and you give a consistent return. That's what people want. Thank you to Nick Akins, Chairman, President, and CEO of American Electric Power. I don't know, Shaka Khan? Oh, why not? She's fabulous. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.